Good evening. This is Ken at Tortoise Capital with a review of the daily trading for February 12th, 2018. We're going to go through the intraday chat room, take a look at a number of rapid case studies, and then we're going to switch over to the swing trading room and take a look at a number of swing trades that were offered today, and see how the traders are doing. First, I want to announce the prices for the live trading workshop. This is going to be conducted 22 to 28 June in Kansas City. We're actually going to do it in a new hotel that just opened up in our hometown of Leavenworth here. Very nice facility. Has high-speed internet access, the fastest connection in the county. It was put in by my network partner and fellow soccer coach who does that for a living. It's right across from his business office. We're going to have really high-speed connections for the training at a brand new facility. It's in downtown Leavenworth, so we're going to have plenty of the first city in Kansas settled over the Missouri River for our locale, so it's going to be an awful lot of fun. We'd encourage you to come join us. Some really good discounts available if you're attending, and if you order the distance learning package before 15 May, you're going to get a nice discount on the Dropbox link for all the research files, and there are going to be many hours of live trading videos and trading lessons from the live trading week. So please contact me if you're interested. All right, so let's just get into the trading. Here's one intraday. We'll start off with some of these. This was the diamonds intraday on 1 minute, and we're looking at the PSAR and MACD histogram partnership. We've been calling this. So again, 30 minutes into the day. We are above the zero line, so we have a long bias now, a potential stock and entry here. If you take that one, we're so close to the zero line that you end up scratching shortly thereafter. Then you have a short side bias while this signal line is below the dotted line. You pick up the long bias here when it crosses the zero line. You don't pay attention to these little crosses because we're in this sideways quiet channel, and so you can retain your long side bias through here. We get a range expansion here and a breakout out of the SQC. This return back into the Red River, if you will, is a logical place to cash a position, and that's a move from an entry vicinity 243 to getting out of 246, so $3 move, and then the rest of the day kind of zeroes out. These yellow dots refer to essentially front runnings, where you have an extended move and then an RLCO outside the river and re-entry, and that's an indication of a potential reversal. So, and that's the first place that you can stalk when you're looking at the MACD. So you have this excursion down below and then a retracement. So that equates to either cover your short here and or consider stalking the long. And then you officially pick up a long bias when we cross the zero line here. And so this is the flip of the PSAR from the short bias to the long bias, which coincides with that move. So that's why we think of this as a partnership. This potential flip here, a change from the long to the short side bias, occurs at this flip in the PSAR as well. And then later, this re-entry into the river coincides with the PSAR flip on the top, where it finds resistance at the RL270. So we're really liking the way this works together. And I would just highlight the idea of the sideways quiet channel to keep you from losing your mind inside these sideways quiet channels. So a nice move in the Dow. Here's an S&P 30-minute trade frame, which got us in on a swing trade. You will recall that last Friday there was a really nice price action in the afternoon on the 30 days. This was, or a 30-minute chart, excuse me. This was very nice, and then it continued with a gap up and a continuation, and then the crossing of the zero line occurs here. This was the mechanical entry and mechanical short for a trade frame from the previous day. At the time of this move here, we were consulting the relative strength stack. So this was percent gain so far that day, and we were looking to get long because the S&P was above the zero line, and so we find the S&P at 1.45. We take our usual suspects, sort them by percent change so far that day, and really I want to own things that are in this stack above the S&P because they have additional buying pressure. So we were looking for things that had been brutalized before, like Coke and McDonald's, were rebounding nicely, and then diamonds and technology were leading the way, along with some energy. And then I really like Boeing because that had been one of the strongest Dow stocks in the previous 6 weeks, and so that became a stalking target intraday as well. So on the 30-day or 30-minute chart, we get nice entries in here for the swing, which paid off intraday and then set us up for retaining some of that for the overnight trade. Here was diamonds. This was Friday's a PSAR flip and a MACD histogram reentry and a crossover outside the river. And it continued strongly, bought at the open on the gap up. This is the official follow through. This would have been a place you could buy if you didn't want this. So nice swing entry on the diamonds. This is the Dow DuPont, a re-entry, a PSAR flip at the close, and then a breakout early in the next day, and then the official long side bias, and now a nice move. This is an 80-cent move from here to there. This is what what the daily trade frame looked like. A long 5 cents above, a stop 5 cents below. This would also have been a stop in reverse, or a initial short if it had failed out. So this is the mechanical entry on the day frame. Now notice that on the day frame we're still deep in the belly of this move, starting to curl up based on today's price action. And so on a daily chart it's premature, but you, in my opinion, you can buy the first third of the position by shifting down to 30 minutes, and maybe you look at the first third of a position on the 30-minute chart, then dial up to the 2-hour charts, then dial up to the daily chart, and that's a way to increment into your swing position by front-running some of these trades early in the day when there is a reversal intraday and you're waiting for the mechanical entry to hit. You can actually get some earlier signals. And so the 30-minute chart is the shortest term trade that I would consider to be a swing trade. That's a fast swing trade, or it's a very, very slow day trade. Take your pick. Here's AXP on the daily trade frame. This one had been a deep sell-off and a recovery, and then the closing price action on Friday. This was buy here or short here, with a stop at the other line, and today was a open, and then it came through the mechanical entry, so we're long on AXP. Apple, same trade. And there was broad-based buying pressure, and that's why the 30-minute entry is suitable in my view. Here's X. This finished really nicely today as well. U.S. Steel. Shifting over to some of our students, this is Glenn, who did a core and turbo essentially. He's using the 30-minute chart. This is XLK. He had framed the trade here. He gets an entry at the open. He's using this as his risk. This is where he would stop and reverse. He's treating this price region as the yellow zone, and he's using just frog technique, and that's 0.27R. In diamonds, the same trade, netting 0.38R, so that's 0.6. EEM, same trade, closing 1.7, so that's about 0.75. XLB, that's approximately 0.5, so that's about 1.3, maybe 1.2. Here's a nice one in XLU, beautifully done. And that's 1.25, so we're up around 2.5 R on the frogs today. And then here's a couple swing trades on the short side that he had set up. This one was starting to reverse, and so he cashed and netted 0.73. So this was a short-term swing and a very appropriate exit given the fact that we're still in a bull market and that maybe the panic selling was over. He'd have been comfortable managing this one on a continued slide, but this is a nice way to lock in 3/4 of an R. And then the final one here in DBC, which netted out to be a scratch, and very well done. Let's shift over to look at the daily report. Bullish volatile in the neutral conditions here. Risk Z starting to prepare to roll up. We're no longer oversold. IEV on an overreaction, no more channelings. You can see the 10-day max pains. Still energy sector in here. And Devon, Wells Fargo, ExxonMobil. Just about everything firing on the auto framer. A handful of dojis, an overreaction, and a 551W on Travelers, which had been one of the two strongest symbols in the Dow, along with Boeing. So that's Travelers will be one that I'm framing carefully. I like ExxonMobil as a max pain and a 6.2 to 1 trade frame here, and it's been beaten down so much and yet had a positive day. So we'll take a look at ExxonMobil here in a second. Among the ETF 30s, just about everything again and then a 551W in gold, channeling in oil, and an overreaction in oil, or in Europe, excuse me. So lots to choose from here. Daily pinch and stretch. These compressions here in oil and Nike. Nike is of interest. It's among the symbols. It's a tight pinch box, relative. It's not super pinch yet, but it is one of the compressed pinches, and it was also the most positive Z stretch in the sense that it was almost right at its Bollinger Band meet. So we'll take a look at Nike as well as Travelers. Lots to choose from in the auto framer. See, 2 days of recovery. This is starting to look like a swing low and a bottoming tail here. See how the slope of the 30-period regression line just been smashed over a 5 sigma move up to the downside. Some recovery here outside of the river, coming back towards the edge of the river. And that's everything I want to cover for today. Let's see if we can't take a quick look at Travelers and Nike. All right, so here's a quick look at Nike on the dailies. And we have the trade frame from Friday. Basically, I'll show you that. That's we set that up so we would be entering 5 cents above the high, 5 cents below the low. So that's our trade frame. And then we actually get the exit or the entry right after the open, moves up, pulls back a little bit. So we're long from 66 and a quarter with an initial risk here. And looking for first price check at 68.74 and to the upside. I like that we are well above the zero line in the MACD histogram, and we got some healing action here. If this resumes to the upside, one more day of buying pressure, and this will be a crossover. And then you get this kind of pattern. The most nearest neighbor was this, was outside the Z2, and then crossed back over the signal line. It had a nice move here, from 65 to 69. So we're looking for a resumption of that kind of a move. Travelers was the same thing. Got our little trade frame, and you can see the it gave back more than Nike did, but still we have a nice 1, 2, 3 entry as well. You can see the trade frame here. Found support at the RL270. We're still above the 0 line, so we have a long bias. So we're here, and we've got about a $3 risk. I'm looking for this. This is where it collapsed before, but I would also be looking to the upside here. Wouldn't offend me if you set this as a price check, as well as like the first price it's got to get through. And so now if it gets to 142 and then starts to hesitate in this market condition, I'd probably go ahead and capture $4 on a $3 risk for 1R. But that's the price ladder that we're looking at. I would consider the second position here after our second price bar, and certainly if it gets above the RL10. This is what Boeing looked like. This was that strong move today. Again, you can see the price trade frame here, and on the upside, I think it's got to get above the 10 period. Let's put our measured risk in there. So we get a visual display on our 1R. And that looks pretty good. I think if it gets above this 352, it's off and running. So that's our daily debrief for February 12th, 2018. Thanks for your kind attention.